about cost of debt. So now, we will be discussing about cost of debt. Now, whenever you borrow debt, now what do you do? What you have to do, you have to pay the interest, right? You will be paying the interest. Now, if I talk about tax benefit, that which security is eligible for tax benefit. If you are raising money by issuing debt securities, or if you are taking loan, so whether you will be get a tax benefit or not, or in case of equity, whether you are eligible for tax benefit or not. Right now, I will be discussing it. Right? I will be preparing one income statement here, and with the help of income statement, we will understand that for which security can claim the tax benefit. So first of all, I will take the capital structure example. Let's suppose you have started a business, and when you have started the business, you have raised money by issuing equity shares. How much you have raised? You have raised, let's suppose, 5,000 crore rupees. You have raised 5,000 crore rupees, right? And from that, what you have done, again, you have raised 5,000 crore rupees. So what is going to be your total capital? Your total capital is going to be 10,000 crores, right? Your total capital is going to be how much? It is going to be 10,000 crores, right? So this is your total capital, right? Further, if I discuss, for debt, what you have to do, you have to pay interest. That is going to be the cost in case of debt. In case of debt, your cost is going to be interest. And let's suppose you have taken loan where you have to pay 10% interest. Where what you have to do, you have to pay 10% interest. So 10% of 5,000 crore is going to be how much? It is going to be for sure 500 crore rupees, right? So this much interest, what you have to do, you have to pay to the bank. Right? Now I'm drawing an income statement here. In income statement, first we write down sales. So here, if I write down the sales, let's suppose sales of your business is 2,000 crore. Right? Now, if I write the cost here, let's suppose cost of material consumed is of 400 crore. You have paid salary. You have paid salary of, let's suppose, 200 crore during the year. You have paid salary of 200 crore rupees, right? There are some other expenses you are bearing, let's suppose advertisement and promotion expenses that cost 100 crore, and other expenses you have incurred towards your business, and in total other expenses are of rupees 300, and you will pay interest also. How much interest you will be paying? For sure, you will be paying interest of 500 crore rupees, right? This is the expense which you will be recording into the account. And if I do the total of your cost, so total of your cost is how much it is? 1,500 crore. It is the total of your cost, right? Now, if I ask you to calculate profit before tax, so how you will be calculating the profit before tax? That is going to be sales minus total cost. That is going to be sales minus total cost, right? So if I adjust sales with total cost, so here PBT amount is going to be 500 crore. And obviously, what you will be doing, you will be paying the tax also. How much tax in India companies liable to pay? Any idea? How much tax in India companies liable to pay? 30%, right? So 500 into 30% if I do, so you will be paying tax of 150 crore rupees, right? You will be paying tax of 150 crore rupees. But if I take another assumption here, right? Let's suppose you have started a business where you have raised 10,000 crore rupees, but here your debt amount is zero, right? You have not raised any amount from loan or by issuing debt securities. Whole 10,000 crore you have raised by equity shares. This is my second case, right? Now, if I draw another income statement, this is for case one. Right? This is case one where you have raised money by debt securities also. And this is case two where you have raised money by issuing only equity shares, right? Now, if I draw the income statement for case two, so what result will be getting here? Here, sales is of 2,000 crore, right? Cost of material consumed is 400, salary 200, advertisement and promotion 100, other expenses are of rupees 300, and interest cost is going to be for sure zero here, right? Interest cost is going to be for sure zero here, right? Now, what is going to be the total cost? If I copy the formula here total cost is to be 1,000 crore. And what is going to be your profit before tax in this case? Your profit before tax is going to be 1,000 crore. Now, you just let me know how much tax you have to pay. If your profit before tax is 1,000 crore, how much tax to pay? You have to pay 300 crore rupees tax, right? That is going to be 30% of 1,000 crore. Here, if you see what you have done, you have paid interest, right? In first case, you are paying interest. And how much tax you are paying to the government? You are paying tax of 150 crore to the government, right? In this case, if you are not paying interest, how much tax you are liable to pay? You are liable to pay 300 crore rupees tax. Yes or no? You are liable to pay 300 crore rupees tax. You are liable to pay 300 crore rupees tax to the government, right? Now, after that, you will be paying the equity dividend. You will be calculating the profit after tax. Right? Profit after tax here in case is going to be 500, 150, 500 minus 150, it is going to be 350. Then it is going to be 700, right? And this amount is going to be distributed to equity shareholders. So dividend में कोई tax benefit नहीं मिलता, आपको tax benefit मिलता है किसमें? Interest में. अब मुझे एक बात बताओ, यहाँ पे tax benefit आपको कितना मिल रहा है? Here in this case, how much tax benefit you are receiving in first case, if I say, so if I calculate the difference between tax paid in case 2 and tax paid in case 1, so you are getting tax benefit of 150 crore rupees, right? You are getting tax benefit of how much? 150 crore rupees if you are paying interest of 500 to government, right? Now, in this case, if I ask you, what is the tax benefit amount? Tax benefit means you are paying less tax to the government, right? You are paying less tax to the government. Right. So how much tax benefit you are receiving here? You are receiving tax benefit of 150. Here you are not receiving any tax benefit, right? In this case, you are not receiving any tax benefit. Here your tax benefit is going to be 0, right? Now, if I ask you that you are paying interest of 500 crore rupees to government, right? You are paying interest of 500 crore rupees to government and tax benefit is of 150 crore, right? Tax benefit is of 150 crore. So what is the net cost? What is the net cost here? Is it possible for you to calculate net cost? If you are paying 500 crore rupees to banks, and just because of payment of interest, you are able to save tax of 50 crore rupees. What is going to be your net cost here? Obviously, it is going to be 350. Very good. But it is going to be 350. This is your net cost, right? This is your net cost. Just because of interest, you are able to save 150 crore rupees tax, right? This is your net cost. Now, here, if I talk about your interest cost, it is 10%. Till now, it is 10%. Why it is 10%? Because 10% of 5,000 crore is going to be 500 crore, right? So if you are paying 500 crore, so it is going to be 10% here. But now I ask you to calculate effective interest rate. Effective cost is 350. Actual cost is 350 for you because you are able to save tax of 150 crore. So now if I want to calculate effective interest rate, so it is going to be 350 divided by loan amount. Right, it is going to be 350 divided by loan amount, and your effective interest rate is going to be how much? It is going to be 7%. Able to understand? Whenever we want to calculate, whenever we calculate interest cost, now we use this formula. Whenever we calculate interest cost, we use this formula. That is going to be interest divided by loan amount, right? So here interest is 500, and if you will divide it by 5,000, so you'll be getting here 10%, right? 500 divided by 5,000, here you will be getting 10%. But our actual cost is how much? It is 350 because we are able to save the tax also. So our actual cost is 350. So 350 divided by loan amount, if I will do, so I will be getting the actual cost, right? So this is a longer process. I can tell you the shortcut, right? Here, what I can do, I can tell you the shortcut. There's a formula. If you see the formula, you will be getting more clarity. So there's a formula. What's the formula? I will show you. Here we can use this formula, and what we can do, we can directly calculate this 7%, right? So here we can use this formula, that is cost of debt is equal to interest expense into 1 minus tax rate, right? So what is the interest expense here? Interest expense is 10%. Yes or no? Interest expense is 10%. Tax rate which we have taken is 30%, right? Tax rate we have taken 30%. Now simply what we have to do, we have to apply this formula. Interest expense is 10%, then multiply, open up the bracket, 1 minus tax rate. What is the tax rate? Tax rate is 30%, and if I solve this equation, so I'm getting 7% interest rate. That is the cost of debt. Am I clear to you all? Yes. How we have calculated this, right? Now we will see case number 1 or example number 1. In this case, if you see, a company named Waste Private Limited took a loan of $2 lakh from a bank at a rate of interest of 8%. To issue company a bond of $2 lakh. So company has issued bond of $2 lakh and interest rate is 8%. Based on the loan amount, the rate of the interest expense is going to be $16,000 and tax rate is 30%. So tax rate given here 30%. Then loan amount is $2 lakh. Interest rate is 8%. $4 lakh loan, what you have to do, you have to pay 8% interest, right? So $2 lakh into 8% if I do. So what interest expense you have to bear? You have to pay interest expense of 16,000 right? But what is the purpose here? What is the main goal here? Here we have to calculate cost of. So we will be using this formula, right? Interest expenses 8%, right? A2, open up the bracket, 1 minus tax rate. Tax rate is given here 30%, right? This step you have to follow and you have to close the bracket and you will be getting the answer. So in terms of dollar, getting the answer. Yeah. Here, final answer is 5.60%, right? So your cost of debt is how much? 5.60%. How much interest you have to pay? You have to pay interest of 8%. But what is the effective interest cost? Effective interest cost is 5.6%. Why effective interest cost is lesser than actual interest cost? Because you are getting 30% tax benefit, right? Getting 30% tax benefit. Just because you are paying interest, you have to pay less tax to the government. So being a layman, अगर मैं बात करूं, मेरे को अगर कुछ पे करना है, उसके बिहाफ में अगर मुझे कैश मिल रहा है, तो मेरा नेट कॉस्ट कितना होगा? लेट्स सपोज if I'm buying an iPhone, right? I'm using SDFC card and I'm buying an iPhone of 1 lakh rupees. And if I'm using SDFC card, so I'm getting 5% cashback. है ना, मुझे 5% क्या मिल रहा है? कैशबैक मिल रहा है. So 1 लाख का 5% होगा, that is going to be 5,000. Now if I ask you that what is the final cost of iPhone, so how much you will say? Is it 1 lakh or is it 1 lakh minus 5,000? 95,000. It is going to be 95,000. It is going to be for sure 95,000. Similarly here, you are getting tax benefit. How much tax benefit you are getting? You have to pay interest, that is 8%. Right? Government is saying, if you are paying interest, so we will be giving you cashback. You just assume tax benefit as a cashback. So government is saying we will bring you 30% cashback. Tax rate is 30% and similar amount of cashback we will be giving you. 8% into 30% if I do. So it is going to be how much? Going to be 2.4%. Government is saying we will give you a discount of 2.4%. So what is going to be your net cost? Your net cost is to be 5.6%. So with the help of this formula, you can directly calculate the net. You can calculate the net cost. Is it clear? This is how we have to calculate the cost of net. Am I making sense? Are you able to understand? So this is how you have to calculate. You can solve example number right now. So solve example number 2. So now, we will be discussing about